Okay, let us start. Today we'll be doing house. Today and tomorrow we'll be doing house property revision. And okay, now this is from your study material, page number 3.155. If you have it right now, you can open it. Otherwise, you can look at the screen. 3.155. Illustration number 6. See, we understand in house property, the calculation is not that difficult. It's quite simple. Whenever we need to compute a house property income, we start with GAV. If you remember that how we start our house property computation, we start with gross annual value, right? What is gross annual value? It is higher of municipal value or fair rental value, whichever is higher. But if a standard rent is also mentioned in the question, then we have to compare with the standard rent, whichever is lower. Do you remember? This is called GAV, gross annual value. And from gross annual value, first we have to find out GAV, and thereafter we have to deduct municipal taxes which is paid. Municipal taxes paid by the owner. If somebody else is paying, then we cannot subtract it. But if they are actually paid by the owner, then we can subtract it. And it should be actually paid during the year. See, if it is not paid, it is due, then we cannot allow it. So it is, I can say that it is allowed on payment basis, on cash basis. If you pay during the year, then only you can subtract it. Then you will get your NAV, net annual value. So here you start with your NAV. In case the property is self-occupied for the entire year, or part of the property is self-occupied for the entire year, then the NAV should be nil. In that case, if the property is self-occupied throughout the year, then we don't start with GAV, we don't take municipal taxes then. We start with NAV then. So for a self-occupied property, NAV is there, NAV nil. And after that, from NAV, we deduct 24A, 30% of NAV, that is the standard deduction. We don't give any other expense deduction in house property except interest on borrowing. So 24B is interest on borrowing. And after these two deductions, 24A, 24B, even if you don't remember the section number in examinations, it's okay. Just write deductions under house property or deduction under section 24. So 24A is standard deduction, 24B is interest on borrowing. And after that, we get our house property income. See, in case the house property is self-occupied throughout the year, NAV is nil. 24A will automatically be nil. Why? Because it is 30% of NAV. 30% of nil is nil. 24B, how much is the interest allowed? Now it depends on which regime we are following. If we are following default tax regime, we don't allow any deduction with respect to interest in case of self-occupied property. For let out, we can allow it, but for self-occupied, we don't allow in default regime. But in optional regime, we can allow maximum 2 lakh rupees. But if it is for repairs, renovation, etc., the maximum is how much? 2 lakh or 30,000? 30,000.
30,000.
Correct. So this is a basic structure of a house property computation. So let us start with this. This says, illustration number 6. Look at the screen. Purna has one house property at Indira Nagar in Bangalore. So she has one house property. She stays with her family in this house. So this statement is telling us that this house is a self-occupied house because she stays with her family in this house. The rent of similar property in the neighborhood is 25,000 per month. Guys, what it is? The rent of similar property in the neighborhood. This is called
Standard rent.
So Manu, it is called fair rental value. So it is the fair rent which the similar property can generate, which the similar property can actually earn. So this is called, it is not standard rent. This is actually a fair rent, right? This is fair rental value. Okay. The municipal value is 2,80,000 per annum. So we can see that the fair rental value is 25,000 per month as given. So 25,000 into 12, if I'll say that the property is there for the entire year, 25,000 into 12 is 3 lakh rupees, or the municipal value is rupees 2,80,000, whichever is higher. So we have to take 3 lakh out of it. But I'm presuming that although I have not read the full question, but the thing is that this property is self-occupied. So in this case, we have to take NAV as nil. So we don't have to compute the GAV even if the property is not let out for the year. Understood? If the property is let out at any part of the year, then we have to take the GAV. But if it is not let out, it is self-occupied, then we don't have to care about the fair rental value or the municipal value also. Are you all getting it, guys? If the property is self-occupied, then we don't care about these two figures also. Municipal taxes paid is 8,000. Again, see, if the property is self-occupied, we start with NAV. We don't take municipal taxes also. The house construction began in April 2018 with a loan of 20 lakh rupees. Okay. This is the loan we have taken in April 18 from SBI at 9% per annum on 1/4/18. So we have taken a loan in April 2018 of rupees 20 lakh for what purpose? For construction purpose. Okay. The construction was completed on 30/11/2020. Okay. So there is a pre-construction period is also there. The accumulated interest up till 31st March 2020 is 3,60,000. I'll see that why they have given this to us. On 31st March 2025, Poorna paid 2,40,000, which included 180 as interest. Okay. So in this year, on 31st March 25, in this year, our assessee has paid 2,40,000 to the bank, which includes 1,80,000 as interest. Okay. So only we have to take interest in house property. So whatever the principal is paid. So I believe 60,000 is the principal repayment of the loan. Are you all understanding it? 240 we have paid. 180 out of 180 is interest. So 60,000 is principal. We don't allow principal payment in house property. Please remember, principal payment is not allowed in house property. However, principal repayment for the housing loan is allowed under 80C. So it is from GTI. Correct. From 80C we can allow it. But now it depends that what are they asking us? Are they asking us the total income, or they are asking about only the house property income? In case they are asking about only the house property income, then we don't require 80C also. Okay. Compute, there was no principal repayment prior to this date. Okay. So this is the first time she has made a principal repayment of 60,000 rupees. Compute Poorna's income from house property for assessment year 25-26, assuming that she has exercised the option of shifting out of the default tax regime under 115 BAC. So this is the question, and she is following optional regime. Now guys, you have to start this question. I'll not start. You have to start this question. Please tell me, was the property let out for any day during the year, or the property was not let out?
Not let out.
It was not let out. Correct? So this was, she stays with her family in this house. And nowhere it is mentioned that the property is let out. So it means that this is a 100% self-occupied property. So for a 100% self-occupied property, we don't take GAV. We don't take municipal taxes paid. We start with, in fact, NAV directly. So we have to start with NAV directly. So please, with me, illustration number 6. So we have to compute computation of house property income of Poorna assessment year 25-26. So since the property, correct me, Likhita, Sugandha, correct, NAV nil. Meera, good morning. So in this case, NAV of the property, because it is self-occupied, so NAV would be nil. Guys, if this would have been, if it would have been given in the question, which they can give, that the property was let out for 1 month, The property was let out for 1 month, and for 11 months it is self-occupied. Please tell me, if the property is let out for 1 month and 11 months it is self-occupied, can we take NAV nil, or in that case we have to start with GAV?
Start with GAV.
Correct. Very nice. So in that case, we have to start with GAV. We cannot take NAV as nil. NAV nil you can only take if the property is 100% self-occupied, means all 365 days. If it's a leap year, 366. For our examination, it's not a leap year. So for entire 365 days, if the property is self-occupied, then only you can take the value as nil. If it is even let out for even 1 day, don't take the NAV as nil. In that case, you have to take the GAV. Correct? But in this case, NAV nil. Less. Deductions under section 24. So we have 24A, which says standard deduction, which is 30% of NAV. Since my NAV is 0, so my 24A will become 0 automatically. You all know it. Then 24B. 24B is interest on borrowing. Interest on borrowing. And guys, interest on borrowing, if this person would have been following the default tax regime, I would have taken 0 over here. But since it is given in the question that she has opted out from the default tax regime, so she is following optional regime. So here, the total interest, the total deduction of 24B maximum can go up till 2 lakh rupees. Had it been for repairs, renovation, reconstruction, this would have been maximum 30,000. Correct? But in this question, it is construction, so it can go maximum 2 lakh. I'm again repeating, this 2 lakh or 30,000, as the case may be, it is allowed only under optional regime. Had it been default regime, this would have been 0. Understood? Second thing is that when I say in optional regime, the maximum limit is 2 lakh for construction or purchase, then it is the total, it is the sum total of 24B. And what is 24B actually? 24B consists of 2 things. 24B consists of current year interest, whatever is the current year interest, it is paid or not paid. It is paid or not paid. It is allowed on due basis. It is allowed on due basis. The current year interest, it is allowed. Even the entire interest is allowed. Not only the current year pre-construction, also the entire interest on borrowing. I should write even due over here. Just for your reference, I am writing. You don't have to write it in your examination. But yes, if your examination question is telling you like this, that this is the interest which got due, and out of which we have only paid this much amount. Let's say rupees 1 lakh is due during the year and we have paid only 80,000. So please just mention that whatever is due is allowed. In PGBP, if we take loan from bank, financial institution, etc., we allow interest only which is paid up to the due date of ROI. But guys, that due date of ROI concept is of PGBP, not of house property. House property says that whatever interest is due, it is allowed. So 24B actually consists of current year interest plus 1/5 of pre-construction period interest. This is also needs to be taken. So 24B consists of 2 things, current year interest and 1/5 of pre-construction. Let me see how much is the current year interest. So the current year interest, they are saying that on 31st March 2025, Poorna paid 2,40,000, which included 1,80,000 as interest. Okay. So the current year interest is out of 240, it is 1,80,000 is the interest for the current year. And although we don't have to calculate it right now, but still, if I want to calculate it, because see 20 lakh was the loan, the rate of interest is 9%. So 20 lakh into 9%, 1 year interest comes to 1,80,000 rupees. I can also reconcile this figure as well, because they are saying that nothing was repaid during the year, or before that we have not paid anything. So I can say that up till this date 31st March 2025, which is the last day of our year, still 20 lakh was outstanding. And on 20 lakh, 9% comes to 1,80,000. Although we don't have to reconcile it, but still if you want to reconcile it, it is coming as 180. So the current year interest is 1,80,000 rupees. It is given to us. Second thing is 1/5 of pre-construction period. Now, what is a pre-construction period? We all know. I'm just revising it for you. I believe that you all know it. What is a pre-construction period? Pre-construction period starts from the date of loan. It starts from the date of loan. And it ends on 31st March. You should remember, it ends on 31st March. Always, it ends on 31st March. 31st March of which previous year? Guys, in the previous year, when the house was completed, prior to that previous year. So please tell me, the house was completed on which date? See, look at this line. It says, the construction was completed on 30th 11/2020. Just tell me the previous year in which this construction was completed. Tell me which previous year it is.
Previous year 2021.
This is previous year. Very good. This is 2021. Guys, we don't have to take this previous year in the pre-construction. Before that. So if you go before this date, so just I'm repeating, you have to see. Correct, Bala. So we have to see that on which date my house is getting completed. So just see in which previous year this date falls. Even if this would have been 31st of March 2021, even this date falls in this date. So you can't say that, sir, it is getting completed on last date. No, doesn't matter. Just see the date on which it is getting completed, which previous year this date belongs to, and before that year, that is 31st March 2020. Up till this date, before this is the pre-construction period, it will end. So it will end on 31st March 2020 in our case. So whatever is the interest for this period, we have to take 1/5 of it. Sometimes we need to calculate, sometimes they will give us directly. So actually in this question, they have given us directly. See, we have to take the interest from the date of loan till 31st March 2020, and they have given this directly to us. They have given, somewhere they have given, see this line. The accumulated interest up till 31st March 2020 is 360. So they have directly given to us that the total interest up till 31st March 2020 is 360. So why they have given to us? Because of this. So the interest up till this period is 3,60,000. So 1/5 into 3,60,000. How much it is? 72,000. Now, the current year interest is 180. 1/5 of pre-construction is 72. Guys, it's very important to also see that because this interest is allowed in 5 consecutive years. The year when our construction is completed, starting from that year, it is allowed in 5 consecutive years. After that, in 6th year, 7th year, 8th year, it is not allowed. So please don't make a mistake. Sometimes students make this mistake also, that even our 5 years are over, they still take 1/5 of pre-construction. Don't make this mistake. So just to check that whether we are in our previous year, whether it is part of that 5 years or not. See, this is the first year. Whenever the house is completed, this is the first year. So 2021 was the first year. 21-22 second year. 22-23 third year. Previous year 23-24 is the 4th year, and previous year 24-25 is the 5th year. This is second year, third year, 4th year, and 5th year. And actually we are calculating for this previous year 24-25. Agree? So we are in the first 5 years. Yes. had it been this would have been in the 6th year, then I would not have taken the pre-construction period. So since we are in the first 5 years, so we can take this pre-construction period interest also. So now we have checked it that yes, we are in the first 5 years. So in that case, 180 plus 72,000, how much it is?
2,52,000.
52,000. But the sum total, see, had it been a let out property, then I can take 252. Whatever is the interest, there is no restriction. For let out property, there is no restriction. Whether you follow optional, whether you follow default. But for self-occupied property, there is a restriction. So since it is for construction, so 2 lakh is the maximum. So maximum allowed is 2 lakh. So in this case, so NAV is nil, 24 is 0, 24 be 2 lakh. So this is income under the head house property, 2 lakh nil. So house property income. Everybody understood it? Arub, Kaushik, everyone, Lalu,
Yes, sir.
Sugandha, Likita, Meera, everybody. Okay. Let us come to another question. Done?
Yes, sir.
Okay. I'm coming to the back questions. Okay. This is page number from your study material 3.175. Good Kabir. 3.175. Question number 1. Raman is a co-owner of a house property along with his brother, holding equal share in the property. So their share is equal 50%, 50%. Guys, these co-owner questions are little important from examination point of view. See, for co-ownership, there is section 26. Even if you don't remember the section number, that is perfectly fine. But for co-ownership, please remember. For co-ownership, whenever the person is a co-owner, that is, there are more than 2, 3, 4 owners, right? More than one owner are there. So in that case, you have to see whether this property is let out or whether this property is self-occupied. See, for co-ownership, if you want to make it, somebody would like to make it, you can make it also. If the property is let out property, so how you should do it? First, in case of let out property, first calculate the income normally. First calculate house property normally. Normally means as a single owner. So first calculate house property income. Don't care about the ownership ratio as of now. So if the property is let out, first calculate your house property income normally. Normally means as a single owner. And after that, once you calculate the house property, then split the income. Split the income, HP income, in the ratio, in the co-ownership ratio. So if the property is let out, so first of all calculate your income, house property income, and then split the income, right? So split will happen at the end. But if the property is self-occupied, then you have to start separately for each co-owner. So if the property is self-occupied, then calculate house property income separately for each co-owner. So in that case, you have to start it with a split. So if the property is let out, you have to split at the end. But if the property is self-occupied, you have to start with the division itself. So for owner number 1, owner number 2, owner number 3, as the case may be, you have to do it separately. And for each co-owner, NAV would be nil. And since the property is self-occupied, guys, now it depends. Now you all know, if we are following default regime, obviously interest on borrowing we will not give any deduction. But if we are following optional regime, for each co-owner NAV nil and interest on borrowing for each co-owner rupees 2 lakh or 30,000 as the case may be for each. So please, some students get this confusion that sir, for one house it is 2 lakh rupees. No, it is for the assessee. It is for the each co-owner. The limit is 2 lakh rupees or 30,000 rupees as the case may be, but only under optional regime. You understand, in default regime, you don't give this deduction also. Everybody's okay with this? Again, I'm repeating. Now, first of all, whenever there is a question of ownership, you have to first determine whether the property is let out, whether the property is self-occupied. If it is let out, first calculate HP, then split. If the property is self-occupied, then first of all, you have to split. You have to calculate for each co-owner separately. So let us see in this question whether the property is self-occupied or let out. Raman is a co-owner of a house property along with his brother, holding equal share. So there are two owners, 50%, 50% each ratio. Municipal value of the property is 160. Fair rent is 150. Standard rent is 170. Rent received is 15,000 per month. Please tell me, what is this information telling me? Rent received. The property is self-occupied or let out? It is let out. So this property, now we can actually determine that the property is let out. And in case the property is let out, so we have to do it. First of all, calculate the house property income normally and then split that income. Okay. The loan for the construction for this property is jointly taken and the interest charged by the bank is 25,000 rupees. Out of, it is not per month. So 25,000 is not per month, guys. It is just 25,000 rupees. Out of which 21,000 has been paid. So now please tell me, out of 25, 21 has been paid. 4,000 has not yet been paid. Doesn't matter. We can allow this entire 25,000 on due basis. Correct, Abhirami. Interest on the unpaid interest is 450. What it is, I'll let you know. To repay this loan, Raman and his brother has taken a fresh loan and interest charge on it is 5,000. The municipal taxes 5,100 have been paid by the tenant. Paid, the 5,100 has been paid, but it is paid by whom? By the tenant. We cannot allow it. It should be paid by the owners. Then only we can allow it. So this will not be allowed. Compute the income of this property chargeable in the hands of Raman for assessment year 25-26. So just for Raman, we have to compute the income. So before we compute for Raman, first of all, we have to compute the house property income on a consolidated basis as a single property, and thereafter we will split this. So this paragraph is mostly about interest. This paragraph is mostly about interest. So we will see this paragraph once again when we will be calculating 24B deduction. Municipal taxes, they have been paid, but it is not paid by the owners. It is paid by the tenant. So will not be allowed. And we have to compute the income of only Raman. So let us first compute the income of the house property in total. This is question number 1. From a study material, page number 3.175. So what you can do is, let me write my main answer. Computation of house property income of Mr. Raman. Assessment year 25-26. In this question, guys, if you have noticed, they have not given to us that whether this Raman or these people are following optional regime or default regime. Does it matter in this question or it does not matter? Tell me. Optional or default?
Does not matter. Doesn't matter.
Correct. Very nice. In house property, when the property is self-occupied, then there is a difference. Because 24B, we don't give in default regime. But in let out, there is no such problem. So in let out, it does not matter that whether we are following optional regime or default regime. Let out, it is same for both the regimes. So computation of Raman income. So whatever is the house property income, 50% would be his income. So 50% of it would be his income. So because first we need to compute the house property income. So for this, we will make a working note. This is our main answer actually. So whatever is my house property income, I'll do just 50% of it. Why? Because there are two co-owners and they both are equal. 50% is the ownership ratio. Now, let us come to our working note. Because I was telling you that first we need to compute our house property income on a consolidated basis. Okay. Tell me, I should start with NAV or GAV? GAV. Why? Because the property is a let out property. Correct. Correct, Rishi. Likita, correct. So GAV. GAV is municipal value or fair rental value, whichever is higher. And then we have to compare with the standard rent, whichever is lower. So I'll be doing it directly. Municipal value of the property is 160. Fair rent is 150. So whichever is higher is 160. Standard rent is 170. 160 and 170, whichever is lower. So it would be 1,60,000 rupees. Everybody is okay with this 160?
Yes, sir.
Good. Arup, Bharani, are you okay with this 160? In fact, I have made a mistake over here. This is GAV. GAV, this 160 is actually expected rent or actual rent, whichever is higher. So my expected rent is 160 and my actual rent is 15,000 per month. $1,80,000, whichever is higher. So it is actually 1,80,000. Everybody understood it? Everybody got it? So my actual rent is 15,000 into 12, 180. My expected rent is 160, whichever is higher, it would be 1,80,000 rupees. Less. Municipal taxes paid by owners, 0. Why? Because it is paid by tenant. So we cannot take that. So NAV is 1,80,000 less 24A, that is standard deduction, 30% of NAV. So I believe it would be 54,000. (24B) interest on loan. Tell me whether 2 lakh is the fixed limit for here, 2 lakh or 30,000. The answer is no, because this is a let out property. So for let out property, there is no restriction. Even if it is going more than 2 lakh, does not matter. So let us see how much is the interest. The loan for construction of this property is jointly taken. So as of now, jointly does not matter because we are just calculating the house property income on a consolidated basis. So the loan of the construction of the property is jointly taken. The interest charged by the bank is 25,000, out of which 21,000 has been paid. 4,000 not paid, doesn't matter. 25,000 we can allow. Interest on the unpaid interest is 450. Okay. interest on unpaid interest is 450. To repay the loan, Raman and his brother has taken a fresh loan and interest charge on this loan is 5,000 rupees. Okay. So see, we have 25,000 interest also. We have 450 interest also. And we have 5,000 interest also. So we have 3 interest over here. This is 25,000. Prerna, yes, the morning classes are available on the YouTube daily. 7:30 to 8:30 is the session time daily. Okay. 25,000 rupees is the interest on loan. It's the interest on original loan. It is the interest on original loan. $450 is the interest on unpaid interest. 450 is the interest on unpaid interest, and 5,000 is the interest on new loan which we have taken to repay the old loan. Everybody okay with this? I'm again repeating. So we have 3 types of interest which is given to us. So first of all, I'm reading it once again. The loan for the construction of this property is jointly taken and the interest charged by the bank is 25,000, out of which 21,000 has been paid. So it does not matter because we can allow on due basis. So 25,000 is the interest on the original loan. So the original loan, the interest was 25,000. Then interest on unpaid interest. So we have not paid the interest to the bank on time. So they have charged interest on interest. That is 450 rupees is the interest on unpaid interest. And to repay this loan, we have repaid the loan. We have repaid the old loan. And Raman and his brother has taken a fresh loan. And the interest charge on this loan is 5,000 rupees. Guys, can you tell me whether all these 3 interests is allowed? Only 1 is allowed? Only 2 is allowed? How much would you think would be allowed?
First and third.
Only 25,000 surrounds.
See, 25,000 is 100% allowed. So see, look at the terminology. 24B says interest on loan. Whatever the loan you have taken, that interest is allowed. So obviously 25,000 is allowed. 450 is not the interest on loan. This is not the interest on loan. This is the interest on unpaid interest. So obviously this 450 can never be allowed. So 450 will not be allowed. And whether this 5,000 can be allowed, the answer is yes, because it is also a loan. So what it has done, the old loan was repaid and we have taken a fresh loan. So it has just, the loan has changed. So it is allowed. We have done it in classes also, that interest taken, the loan which you take to repay the old loan. So it happens. Let's say, for example, original loan you have taken from State Bank of India, SBI. So original loan you have taken from SBI at a rate of, let's say, for example, I'm just giving you an example, at a rate of 12% per annum. Let's say the loan was 20 lakh rupees. So you have taken 20 lakh rupees from SBI at 12% per annum. After 1 or 2 years, you find that another bank, let's say PNB, is giving you rate of interest at 9% per annum. So what people will do, they actually does is, they repay, they just go to the PNB bank. They say that, sir, we already have an existing loan which is running from SBI and we want to shift our bank from SBI to PNB. Can you help us? So PNB says, okay, don't worry. Whatever is the loan which is outstanding there in SBI, we will pay it directly. So PNB pays it directly. So your loan, the bank is getting changed. So from original loan, from original SBI, the bank is changed to PNB. Otherwise, it is also a loan. So in this case, 25,000 is allowed, 5,000 is allowed, 450 is not allowed. Interest on interest is not allowed, only interest on loan is allowed. So interest on loan, so on original loan, 25,000 is the interest. On fresh loan, 5,000 is allowed. And you have to mention this as well. that interest on unpaid interest is not allowed. So only 30,000 can be allowed over here. And is there any restriction on the interest? The answer is no, since it's a let out property, so there is no restriction. So 30,000 can be allowed over here. So how much it would be? Is it 96,000, guys?
Yes,
House
sir.
property income? 96,000. Please tell me, it is just the income of one owner or it is the income of all the owners?
All the owners.
Correct. It is the income of all the owners. So now, so that is what I was telling you. If the property is let out, so first calculate your house property income normally. So we calculated it normally 96,000. Now we will split this in the ownership ratio and we have to compute only for Raman. So 96,000 into 50%.
48,000.
Correct. $48,000 is my answer. Everybody is okay with this?
Yes, sir.
Yes, sir.
Good. Now, let us come to one more question. Okay. Guys, you have to do it right now. You have to do this question right now. I'm just reading it out for you and then you have to do this. Vikas, this is page number 3.176. Question number 3. It says, Vikas owns a house property whose municipal value, fair rental value and standard rent is given. So 96,000 is the municipal value. Fair rental value is 126. So you understand fair rental value or municipal value, whichever is higher, 126. 126 compared to standard rent, whichever is lower. Standard rent is given to us 108. So 126 and 108, whichever is lower, it is 108. So this is expected rent. ER, expected rent of the property is 108. During the financial year 24-25, 1/3 of the portion of the house was let out for residential purpose at a monthly rent of 5,000 rupees. So 1/3 portion is let out, okay, and the actual rent is 5,000 rupees per month of 1/3 portion, okay. The remaining 2/3 portion was self-occupied by him. The remaining 2/3 is self-occupied, okay. Now there is one property and it has different uses. It has different uses. One part is let out, another part is self-occupied. So whenever there is a single property and which is used by assessee differently, so we have to compute it as a separate house. So for 1/3 we'll make one column, for 2/3 we'll make another column. 2/3 self-occupied, 1/3 let out. Municipal taxes is 11% of the municipal value was paid during the year. Okay. Municipal, how much was the municipal value? The municipal value was 96,000. 11% is the taxes we have paid. The construction of the house began in June 17 and was completed on 31st March 2020. Okay. The house was completed on 31st March 2020 and the construction began in June 9, 17. Correct. So please tell me in which previous year the house was completed.
2021.
Year 2020.
2021.
This is previous year 2021, almost the same previous year which we have done in the earlier question also. 2021. Okay. No, it was not the same one. It is previous year 2021. I think there it was 21-22. Okay. Now please tell me, he has taken a loan on 1/7/17. What is the pre-construction period? What is the pre-construction period? From 1/7/17, the pre-construction period would start from the date of the loan 1/7/17 till when? Tell me, till when?
31st March
31
2020.
March 2020.
Before this previous year. So before this previous year is 31st March 2020. So this is your pre-construction period also. Now, Vikas has took a loan of 1 lakh rupees on 1717 for construction of the building. He paid interest on loan 12% per annum, and every month such interest was paid. So he was paying interest also. Doesn't matter, even if he is not paying it, interest is allowed on due basis under house property. But the rate of interest is 12% per annum. Compute income from house property of Vikas for assessment year 25-26 if he has exercised the option of shifting out of the default tax regime. Again, he is following optional regime. So in this question, 1/3 of the property is let out, 2/3 of the property is self-occupied. There is a loan also which is going on the property. For the entire house, we have taken a loan of 1 lakh rupees at rate of 12% per annum. There is a pre-construction period interest also. Now you have to calculate the income of Vikas under house property as per the optional tax regime. He is opted out from the default regime. So guys, you have to do this question. I'm just giving you a format right now. Correct, Sugandha. So it would be solution number 3. Computation of house property income of Vikas this is assessment year 25-26 and he's following optional regime. So 1/3 is let out property. 2/3 is self-occupied property. GAV, you know the format, GAV minus municipal taxes paid after that we get our NAV, net annual value. From net annual value 24A, standard deduction, 24B, interest on loan. Interest on loan consists of two parts, current year interest and 1/5 of pre-construction. It consists of, so first of all, just see that whether pre-construction period is there or not. Although the question is saying that yes, it is there. But see whether, because our previous year is previous year 24-25. So whether we are in the first 5 years or not. See, 2021 is the first year. 2021 is the first year. Then if you just calculate 21, previous year 21-22, 22-23, '21, 22, 22, 23, 23, 24, and 24, 25. Yes, we are in the 5th year again. So this is the first year, second year, third year, fourth year. We are in the 5th year. So yes, pre-construction period is there. Now, guys, I am just giving it to you. You have to calculate for me that there would be a current year interest also. B. If you don't want to write it A or B, current year interest and 1/5 of pre-construction period interest also. You have to add them up. This is 24B. And then thereafter it would be on house property income. He is following optional regime. Now you have to fill up all these things. So I'm not doing it. You have to do this. Should I show you the question as well?
Yes,
So
sir.
this is the question. I think that you should not take more than 5 minutes. So I'm giving you 5 minutes and tell me the answer. This is the format you have. And please remember, for self-occupied property, you don't have to start with GAV municipal taxes, you have to start with NAV. But for let out, you have to start with GAV. Lalu got the answer?
Sir, end of this.
Okay. Likhit 20,936. Okay, it's the final total answer of both the properties, 1/3 and 2/3. Okay. Now, see, GAV for self-occupied, we don't have to take it 0, 0, and the NAV would be nil for self-occupied property. And whereas for the let out property, we have to take the GAV. So what is the expected rent? So the expected rent for the entire property is 96,000 or 126, whichever is higher, 126, limited to standard rent, whichever is lower, 108. So 1,08,000 is the expected rent. And for 1/3 portion, we need only for the 1/3 portion. So 1/3 portion would be
36,000.
correct, 36,000. And what is the actual rent is 5,000 per month. 5,000 into 12, it is 60,000. So we understand expected rent or actual rent. So please don't make this mistake. If you are doing for 1/3, expected rent should be for 1/3. Just compare that 1/3 of the expected rent with the actual rent of this property. So this is 60,000 rupees is my GAV. How much is the municipal taxes paid? The municipal taxes paid is, they have said 11% of the municipal value. Correct. 96,000 is the municipal value, 11% of that. So 96,000 into 11%, and you have to take only for the let out portion. Only for the let out portion. So let out portion would be 1/3. Got it?
3,520.
Correct. So this is 3,520. This is the municipal taxes paid. Only 1/3 portion. So minus 60,000, you will get 56,480 rupees as the NAV. And now 30% of NAV, 30% of this amount,
16,944.
16,944, very good. So this is the interest, this is the 24A standard deduction. In let out property, we'll get 16,944, but in self-occupied, you understand the NAV is nil, so it would be 0. Now we have to compute the interest on loan. Current year interest. When I say current year interest, guys, please remember we are doing assessment year 25-26. So when I say current year interest, so this is our previous year. So whatever is the interest which is related to previous year 24-25, this interest you have to take, whatever is due. So this question is little easier. Otherwise, if I would have given this question in your examination, I would have changed the outstanding amount also. So in this case, the outstanding is not getting changed. So we can easily compute for 1 year. But please remember, in your examination, you can get that question also where the loan amount is getting changed. Why? Because we might be repaying something in between. So you have to take care of that whatever is the outstanding interest, you have to calculate that interest. So when I say current year interest, current year for our examination, the current year is previous year 24-25. So just see whether the loan is same or the loan outstanding is getting changed. So in this question, actually there was no change. The loan was 1 lakh rupees and nothing has been repaid. Only the interest we are paying. We are not paying the loan amount. So 1 lakh was fixed. So 1 lakh was fixed, and for this entire year it was outstanding also. So they are saying that we have taken a loan long back and we are just paying interest. Nothing is mentioned about the principal repayment. So it means that the loan is still 1 lakh rupees. Still the bank would like us to pay 1 lakh rupees as their loan. So 1 lakh into the rate of interest is 12%. So 1 lakh into 12%. So it is 12,000 rupees. If you want, you can show this as a working note also, this loan amount. So 12,000 is the current year interest. Now 1/5 of the pre-construction. So we understand 1/5 of pre-construction. The pre-construction period begins on the date of the loan 1/7/17 till we have done that till 31st March 2020. Now this period interest, again, this question is again easier. Correct. This question is again easier. In this case, the loan was not getting changed in this period. But you might again get such a question where the loan outstanding is changing in this period also. So please be very cautious in this, that you have to calculate your interest accordingly. So in this case, there is no issue. So 1 lakh was the outstanding for the entire period. 12% was the rate of interest. For 1 month, it is 1/12. And tell me how many months are there?
33 months.
33 months. From this period till this period, if you calculate it is 33 months. So this interest into 1/5.
6,600. 6,600.
6,600. After doing 1/5, Kaushik?
Yes, sir.
Yes, sir.
Okay, good, Bala. Kaushik, good. 6,600. So the total interest, current year and 1/5 portion is 18,600 days. This is the total interest for this particular period of 24B. And this 18,600 is for the entire house. 1/3 of this is 6,200.
Well,
We'll take it here. and remaining 12,400 will take it here, right? And guys, in let out there is no limit, so there is no limit, but in self-occupied there is a limit. It is for construction, so 2 lakh is the limit. We are within the limit. Had it been a default regime, I would have taken 0 over here. Here we can take, because let out there is no problem, but for default regime in self-occupied I would have taken 0. Maximum in optional regime it is allowed, maximum 2 lakh rupees. We are not going beyond that, so it would be, here it is 12,400 is a loss.
33,336.
33,336. Correct, Bala?
Yes, sir.
So this is my house property income. So house property 1 has a profit, house property 2 has a loss.
Total house property income 20,936.
20,936.
Yes, sir.
This is our house property income. Correct, Likita. Correct answer. Sugandha, correct. Everyone, correct. So these are the few questions which I would like to discuss today. Tomorrow I'll be picking up some more questions from the past year questions. So let us meet tomorrow at 7:30. Correct? Any other doubt? Please do let me know.
Sir,
Yes, please.
sir, should we show current year interest and 1/5 of pre-construction interest separately or together, sir?
Kaushik, can you be little louder, please? You are telling me something about pre-construction period that I understood.
Yes, sir. Interest on loan, there is 2 components, current year interest and 1/5 of pre-construction interest. Should we show separately or should we show together, sir?
This you should show it separately.
Okay.
For the pre-construction period, you should show it separately. This is what your question is?
Yeah, I'm asking it in let out and self-occupied, sir.
Okay, for let out and for self-occupied, no, it is better. It will take time. In that case, you will eat up. Your time will be consumed in case you will be calculating it separately for both. So it's better. First of all, calculate the entire interest. Entire interest like this, and then just do the split of 1/3 and 2/3 as the case may be.
Yes, thank you, sir.
No problem.
Sir, I have a doubt.
Yes, Abhirami.
In case the municipal tax is paid by the owner of the house property, and the
Correct.
question mentions that it is reimbursed by the tenant, then should we you calculate or like mention the
Okay.
municipal tax rate?
So it's like the tenant has paid it first, and then the owner is paying it back to the tenant.
No, sir. First the owner pays, and then the tenant pays it to the owner.
Okay. See, it's very logical. In fact, you can give me this answer. It's very logical. So these are the expense. See, municipal taxes paid is the expense allowed to the assessee. So we are calculating assessee's income. For example, you have a property. And I am the tenant in that property. Abhirami, got it? You have the property and I am the tenant. And we are calculating your income. So if there is any expense which is going out from your pocket, then it is actually an expense. If it is not going out from your pocket, then it is not your expense. So let's say now the assessee is Abhirami, and Abhirami has paid the municipal taxes. Full stop. If she has paid the municipal taxes, it means that this is your expense. We will deduct it. Over here. But let's say if you have paid it first, and then your tenant is reimbursing back to you. So you have not paid anything from your pocket. Correct, Abhirami?
Yes,
In that
sir.
case, it is not your expense. So in that case, it is not your expense. So it would be not be deducted in that case. So if, see, the crux is, the summary is that if there is no hit on your pocket, you are not paying anything from your pocket, it is coming back in your pocket, then it is not your expense.
Okay, sir.
So,
Correct? Yes, please.
so can you explain this whole 24B deduction?
24B deduction, this one?
Yes, not in this question, like,
No, normally. Okay.
yes, normally.
Kabir, I'll try to do that. Okay. Kabir, generally, last day before revision, last day before revision, I would not suggest you that you would be solving the question. This is the time when you have to practice. Last day, just one day before the examination, you have to just look at the provisions. Instead of solving the questions, I would say that the provisions. So right now, what we are doing in practice, it is good enough so that your all the concepts can be revised. Okay, now Aru, see 24B is interest on loan. So how we compute the interest on loan 24B is divided into two parts. First, it is current year interest. Current year interest. What is current year interest? Obviously, we are doing for the previous year 24-25. So we are doing calculating for previous year 24-25, that is assessment year 25-26. So the current year starts from this date. So whatever is the interest, so there are two parts, Arup, actually, current year and pre-construction, 1/5 of pre-construction. 1/5 of pre-construction, I'll come after 2-3 minutes. So first, let us understand the current year interest. Current year interest means that any interest which is getting due from this particular period, from 1/4/24 till 31st March 2025, that is called current year interest. Arup, this much is okay?
Yes, sir.
Okay, now let us see. Let's say there is a loan of rupees 20 lakh. There is a loan of rupees 20 lakh, which is outstanding during this period, And the entire loan 20 lakh is outstanding. We have taken a loan from the bank. Let's say we have taken the loan 1 year back, 2 years back, 3 years back, does not matter. Whenever you see current year interest, you just have to see that whether there was a loan in this period or not. So you get to know that there is a loan of 20 lakh rupees in this period. And in the entire year, it was 20 lakh only. The outstanding which the bank has, which we have to pay to the bank, is 20 lakh rupees. So my first easy case is, let's say 20 lakh rupees is the loan which is outstanding. Let's say it is at 12% per annum. It is 12% per annum. So if it is outstanding for the entire year, so current year interest would be 20 lakh into 12%. 2,40,000, that's it. This is the current year interest. Second scenario, if your question is saying to you that there was a loan of 20 lakh, but we have paid the entire loan. We have repaid the entire loan. Let's say on 31st of December 2024. Just tell me, if we have repaid the entire loan, it is mentioned in the question that we have repaid the entire loan in this year. First of all, tell me, on 1/4/2024, this is my case number 2. On 1/4/2024, the loan was 20 lakh. On 31st March 2025, there was no loan. Why? Because in the month of December itself, we have repaid 20 lakh rupees. We have repaid the entire loan. So whether the loan was outstanding for the entire year, the answer is no. The loan was outstanding in this date. April it was outstanding, May it was outstanding, till December it was outstanding. So the loan was outstanding only for 9 months in this year. So what is the current year interest? What is the current year interest which we have to pay to the bank? It is not for 12 months. It would be 20 lakh at a rate of 12% only for 9 months till December 2024. So this is actually the current year interest. So you can calculate it, 20 lakh into 12% into 9/12. Are you okay with this case also? Should I explain it again?
No, sir. Clear.
It's clear? Okay.
Yes, sir.
Let's say if I say, now you have to calculate, and in fact, everybody has to calculate this for me. Let's say I say that there is a loan which has been taken by the assessee. When he has taken doesn't matter right now, but he has taken it 1 year back, 2 years back, 10 years back, doesn't matter. When I say current year interest, so I'm strictly talking about 1/4/24, this previous year. I'm strictly talking about 1/4/2024 till 31st of March 2025. Sometimes your question can say like this, that there is a loan of rupees 20 lakh rupees. It was outstanding at rate of 12% per annum. And we have repaid 5 lakh rupees on 31st of July 24, and we have again repaid 4 lakh rupees on 31st January 25. Sometimes the question can say like this, that during the year there is a loan repaid of 5 lakh rupees on 31st July 24 and 4 lakh rupees on 31st January 25. Now please tell me, you have to see that whether the loan was there in this period. The answer is yes, it was there. What was the loan outstanding as on 1/4/24? It was 20 lakh rupees. It was 20 lakh rupees was the outstanding. Okay. After that, we have repaid 5 lakh rupees. So once we have repaid 5 lakh rupees, the loan outstanding was 15 lakh rupees. Are you okay with this? 15 lakh. Now the loan outstanding is 15 lakh. You have to pay 15 lakh rupees more to the bank now. And thereafter, you have paid 4 lakh rupees also. So now your loan outstanding is 11 lakh rupees. Arup, are you okay with this? How this 15 and 11 is coming?
Yes, sir.
We are repaying it to the bank. We have taken it
Yes.
from the bank se liya tha, and we are paying it back. The 20 lakh ka loan tha, there was a loan of 20 lakh. We have repaid 5 lakh rupees here. We have repaid 4 lakh rupees over here. Now please tell me, since the outstanding was 20 lakh, 15 lakh and 11 lakh, now we have to just see that for how much the bank will demand the interest. So bank will say that I need interest on 20 lakh from this date 1/4/24 till you have repaid 5 lakh rupees on 31st July. So after 31st July, your outstanding is 15 lakh. So it means till 31st July, your outstanding was 20 lakh. And from 1st August onwards, from 1st August 2024 onwards, your outstanding is 15 lakh rupees. Are you okay with me? So bank will say, for the month of April, for the month of May, for the month of June, and for the month of July, I will take interest on 20 lakh rupees because the outstanding was 20. So bank will say, I will take interest on 20 lakh. And from August onwards, bank will say that we will take interest on 15 lakh. Okay. From August onwards, they will say 15 lakh rupees, but we have repaid on 4 lakh on 31st January. Okay. The bank will say, okay, so till 31st January 25, your outstanding was 15 lakh. And from 1st February 25 onwards, I will take interest on 11 lakh rupees. Are you okay with it? Now, if I ask you that what is the current year interest? So the current year interest, now it is changing. It is changing in the year itself. Why? Because my loan outstanding is changing. So from April, May, June, July, for 4 months, you have to compute interest on 20 lakh at a rate of 12%. Now from August till January, August, September, October, November, December, January, for 6 months, you have to compute 12% on 15 lakh. And February and March, for 2 months, you have to compute on 11 lakh. Till 31st March, we have to compute. So my outstanding during this period is actually getting changed. So my interest of the current year will also get changed. So 20 lakh for 4 months, 15 lakh for 6 months, 11 lakh for 2 months. Arup, you are okay with this also?
Yes, sir.
This is how the current year interest will work. Now the second part of 24B is pre-construction period interest. Current year plus pre-construction period. And we allow pre-construction period interest in 5 equal installments in first 5 years. First 5 years, we start from the year when the house is completed. So what is pre-construction period interest? So 24B is sum total of current year and the pre-construction period. Now let us understand what is pre-construction period interest. Let's say, for example, let's say Arup, you have a land. You have a land and you want to construct a house. You want to construct a house and construction will take some time. It might take 1 year, it might take 2 years, it might take 3 years also. So let's say you have a land, but you need loan for construction. Okay. You go to the bank. Let's say for on 1/7/2019, you go to the bank and you say that I need rupees 10 lakh rupees for construction purpose, for construction of the house. As of now, the house, there is no house. You would like to construct it. So on 1/7/19, you go to the bank and you ask for 10 lakh rupees. Bank says, okay, I'll give you 10 lakh rupees at a rate of, let's say, for example, 9% per annum. Okay. And you took this loan from the bank and you start doing your construction. Your constructions gets completed on 15th of, let's say, December 2022, your construction gets completed. This is the completion date. Your house is completed on this date. Now, you are computing the house property income of previous year 24-25. You are computing the house property income of 24-25. Your house was already completed 2 years back in December 2022. Now, what you will do? First of all, you will see that whether there is any pre-construction period or not. So let me draw this on a number line. Tell me the date on which you have taken the loan. The loan was taken on 1/7/2019. This is the date of loan. 1/7/19 is the date of the loan. And the construction was completed on 15 December 2022. The construction was completed on 15 December 2022. This was the construction period. So technically, a layman will say, what is your pre-construction? See, after this, your house is completed. So a layman will say that, sir, after 15 December, it is post-completion. It is post-completion. And before that, it is pre-completion. Arup, you are getting this also?
Yes, sir.
This is the date on which my house is ready. My house is ready. My house is completed. So before that, there is an interest because we have taken a loan in 2019. So this is the pre-construction period. But in house property, the house property provision says that actually we have to see that the date on which the construction is completed. The construction is completed on 15 December 2022. Just see the previous year in which this date is falling. Just see the previous year where this date belongs to. Tell me this date belongs to which previous year. Just see which this date belongs to which previous year. This date belongs to previous year
22-23.
21-22 or 22-23? 22-23. Correct, Ba.
22-23.
Arup, you are okay with this? This date belongs to previous year
Yes, sir.
22-23. So what you need to do is, again I'm repeating, just see the date on which your house is getting completed. Now check in which previous year does this date falls. This date falls in previous year 22-23. Before that, just before that, what was the date? Just prior to that, what was the date? The date was 31st March 22, because this previous year starts from 1st April 22. Just go one day before that. So it is 31st March 2022. Although technically layman will say that the house is completed on 15th December 2022. But we will say, as under house property, that your house is completed on this date. We will say that the pre-construction period is from 1/7/19 till 31st March 2022. Have you understood this or not? This is the pre-construction period. Not till 15th December. 15th December, this is what layman will say. But as per the house property provisions, we have to take till 31st March 2022 only. Again, I am giving you one more case. Tell me what is the pre-construction period. Everybody, we have taken a loan. Date of loan is, let's say 1/11/2018. And the house is completed on 31st March 2022. House is completed on 30. It is given that the house is completed on 31st March 2022. Now, what is the pre-construction period? The pre-construction period, just see the date of completion of the house. Tell me the previous year which this date belongs to. Please tell me this date belongs to which previous year?
21-22.
21-22.
This date belongs to previous year 21-22. Very good. Guys, from 21-22, it is always post. This year is starting from 1st April 2021. This is starting from 1st April 2021. Just go one day before it, 31st March 2021. Till here, it is your pre-construction period. So pre-construction period will be from 1/11/2018, from the date of the loan till 31st March 2021. This is your pre-construction period. Arup, you understood it? How to compute the pre-construction period also?
Yes.
Just see when your house is getting completed, in which previous year it is getting completed. Before that 31st March would be your pre-construction period when it is ending. So now you have to calculate the interest for this particular period. So how you will calculate the interest for this particular period? Just see how many months are there. So you have to compute the months from 2018 till 31st March 2021. I believe that you can easily calculate the number of months. Just calculate the number of months. Just see whether the loan is outstanding in this period or not. Whether the loan outstanding is getting changed or not. It is same or it is getting changed. Accordingly, calculate the interest for this period. And once you get the interest for this period, just do 1/5 of that. And this should be allowed from which previous year? When your house is completed. Your house is completed in previous year 21-22. So this is the first year. It is allowed in 5 consecutive years. 1/5, 1/5, 1/5. So 21-22 is the first year. 22-23 is the second year. 23-24 is the third year. And 24-25, our year is fourth year. Had it been our year is fourth year, we are okay with it. Fifth year, we are okay with it. But if this would have been 6th year, 7th year, 8th year, then we don't take pre-construction period. Why? Because it is allowed in 5 years. So if 5 years are already over before our year, then it's okay. We'll not take pre-construction. But if we are in the first 5 years, we are in first year, second year, third year, fourth year, fifth year, then we have to allow 1/5 of pre-construction period also. So in this case, we are in 24-25. Let's say we are in the fourth year. So we have to take 1/5 of pre-construction. So whatever is the interest of this period, calculate the interest accordingly as per the outstanding. If generally in your examination, if the question is easy, they will not change the outstanding, just calculate the interest for this period. But if the question is little bit, it's not difficult, but little bit more calculations would be there. If the outstanding is getting changed, calculate the interest accordingly, just do 1/5 of it. So 1/5 of pre-construction period, just add this interest also in the current year interest. So this is the total deduction in a 24B. If it is a self-occupied property, maximum 2 lakh rupees. And if it is a let out property, then there is no limit to it. Understood this? Understood
Yes,
this? So
Yes,
try to do some more questions, which I have done in the classes also. Try to do 2-3 more questions on pre-construction period interest. You will feel comfortable in that. Okay, let us continue this tomorrow then. Thank you so
Thank you,
much.
sir.
Bye and take care.
Thank you, sir. Have a good day.
Bye. Take care.